All right, let's dive right in. Today, we're talking about a massive shift that some people think is happening right under our noses in the world of finance. It's this epic battle for the title of the ultimate safe place to store your money. You could call it a story of the ancient champion gold versus the new digital challenger Bitcoin. To really get what's going on here, we kind of have to start at the beginning, with the very idea of value. And this quote from Elon Musk just nails it. He's basically saying that the truest form of currency isn't a piece of paper that a government prints, but something that's tied to the real world, something that takes actual physical work to create. In a word, energy. And that is where the whole conversation about Bitcoin really kicks off. Musk himself calls it a physics-based currency. And you might ask, why? Well, it's simple. You can't just pass a law and make more Bitcoin appear out of thin air. To create it, you have to spend a ton of real-world energy in a process we all know as mining. It's all governed by math and physics, not by a committee in a boardroom. So this really sets the stage for a main event. In one corner, you've got gold. I mean, it's been humanity's go-to store of value for thousands of years. You can touch it, you can trust it, everyone knows what it is. And in the other corner, you have Bitcoin, what a lot of people are calling digital gold. It's the new kid on the block, born from code, and it's making this huge promise to be the best kind of money for our digital world. You know, you can't make this stuff up. Right as this debate is raging, the real world just drops this perfect example in our laps. This just happened. A huge, massive discovery of gold in Saudi Arabia. Now, if you're a gold miner, that's amazing news. But if you're holding gold because you think it's scarce, well, this highlights a really important fact about it, which is this right here. The thing about gold is, while it's hard to get, we ultimately have no idea how much is out there. For all we know, the supply is basically infinite. We can always dig deeper, find new veins, maybe even mine asteroids someday, who knows? Bitcoin, on the other hand, is the complete opposite. It has a hard, absolute cap that's written into its code. There will only ever be 21 million. That's it, full stop. And the differences are about more than just supply. This is where it gets really practical. Think about it. Imagine trying to move $1 million worth of gold across a border. It's heavy, it's risky, it's a huge pain. With Bitcoin, it's just information. You can send it anywhere with an internet connection. Plus, gold markets have opening and closing bells. The Bitcoin network? It never sleeps. It's trading 24 hours a day, 7 days a week, 365 days a year. And verifying gold is real takes experts. Verifying a Bitcoin transaction, the network does it for you automatically. Okay, so all of this leads to a concept that's, well, it's a little bit mind-bending. It's something that investor Michael Saylor calls the Immortality equation, and it's all about what scarcity really means when you look at it through the lens of math over a super long time. So let's start with gold. Every single year through mining, we increase the total amount of gold in the world by about, let's say, 2%. You can just think of that as its inflation rate. It means every year, the whole pie gets 2% bigger, so your slice of that pie gets just a little bit smaller. So what's the big deal about 2% a year? It doesn't sound like much, right? But it adds up. It gives gold what you could call an economic half-life. If the supply goes up by 2% every year, it means the total amount of gold in the world will double in about 36 years. Think about that. The scarcity of the gold you own has effectively been cut in half in just a few decades. And this leads to a really, really powerful way of thinking about it. An asset like gold that's always being diluted, always losing a little bit of its scarcity, it's kind of like a mortal life. It has a finite nature. But what if there's an asset that could never be diluted? Well, that is what proponents are calling economic immortality. It's this idea that because Bitcoin's inflation rate is programmed to eventually go to absolute zero and stay there forever, its scarcity can never, ever be watered down. Your piece of the pie will never shrink. It's fixed for all time. In economic terms, it's immortal. Okay, I get it. That all sounds really cool in theory. It's a fantastic argument. But is any of this actually playing out in the real world? Is the so-called big money even paying attention to this stuff? Well, let's take a look at the evidence. So, according to people who watch these markets like a hawk, like investor Lawrence Lippard, a really clear pattern is starting to show up. When things in the market get a little shaky and people start looking for safety, the big traditional money doesn't just jump into the newest technology. Nope. It follows a path it's taken 1,000,000 times before. And this right here is basically the playbook. First, fear creeps into the market. Then, the really big money, we're talking central banks, huge funds, they all run to the one thing they know and trust, gold. But then, and this is the new part, after they've made that initial move to safety, some of that money starts to look around and rotate into the asset they think has more upside, the one with those superior digital properties, Bitcoin. And we're seeing this cycle happen. And if you're looking for the smoking gun, the proof that the big players are getting serious, look no further. This isn't some tiny startup. We're talking about US Bank, a $700 billion institution, and they're launching custody services. All that means is their wealthiest clients can now securely store Bitcoin right there with their traditional bank. That's a massive, massive step. And look, the US Bank news isn't happening in a vacuum. It's just one part of a much bigger trend. First, you had the Bitcoin ETFs get approved, which opened the floodgates. Now you have the big banks building the actual plumbing to handle the money. We're even hearing whispers from sovereign wealth funds, that's a country's money, that they're looking at Bitcoin. The foundation is being built piece by piece. Now, this whole gold versus Bitcoin story is definitely the main event right now, but it's important to remember it's happening inside this bigger, buzzing ecosystem of crypto that's constantly changing. So let's just zoom out for a quick second and see what else is going on. So for example, you have Ethereum, which is the platform that thousands of other crypto apps are built on. It's getting ready for a huge upgrade to make it way faster and able to handle more people. At the same time, the big exchanges like Binance are showing how stable they are. We can see right on the blockchain that they're holding something like $120 billion in reserves. After some past failures at other companies, that's a huge sign of maturity for the whole market. So we'll end on this, a bit of a cryptic question from one of the biggest names in the space. Michael Saylor is famous for tweeting a simple orange dot every time his company buys more Bitcoin. But just recently he teased this. What if we start adding green dots? Now, nobody really knows what that means yet, but it's a huge signal that this story is far, far from over. And it really just leaves you wondering what's the next big move in this whole financial rotation.
Stay ahead in the crypto market. Subscribe now for the latest global news and updates.